All right. Good morning, everybody. Mike Courtney here. I'm coming to you on a beautiful, muggy, hot, and humid Wednesday morning in southeastern Pennsylvania. And I'm joined, as always, by my good friend and counterpart, Steve Parisi, President and CEO of IBC Global. Steve, how are you today?
Fantastic, my friend. I got my double shot, getting the
Nice.
juices flowing. Yeah,
You
I
gonna
feel
run in
good.
this morning? You must have been drenched.
I did. Yeah, I was drained at the end of it, but that's okay. Yeah.
It's like a heavy, heavy air out there.
Yeah, I was done at the end of it. Wednesdays I do 5 miles every Wednesday, and I was like, all right, I'm done as I got to my driveway. Yeah.
Good for you.
Yeah,
Good.
thanks.
All right, so we're both feeling good today, and we want to talk about something that a lot of times is the cause of stress and concern and makes people feel not so good, which is debt and servicing debt. And we want to talk a little bit about how to use your life insurance policy to wipe out some debt, to clear debt off the table. Is this a good idea? When is it a good idea? When is it not a good idea? And some of the, kind of personal, emotional pitfalls that go along with all that kind of planning, right?
Yeah, definitely. And that last part you mentioned, as far as the personal and emotional pitfalls, I think that's always the issue when it comes to debt. I know for me in the past, I have had a lot of debt in the past. That was always the issue there. Whether it's just expenses, if I like going out to eat a lot, or I'm spending money on things I don't really need, and that's the source of the debt, actually realizing that. Maybe I write it down and look at it and say, hey, I'm spending an extra $3,000 per month, and the excess credit card balance I have is $2,800 or $3,000. I'm like, all right, that's it. But being able to actually give that up, if I'm emotionally tied to it, that can be the hard part, just for us as humans, right? We're emotional. So step one often there is just to write it down. Get everything written down, which can be painful. It can be boring. But when you write it down and give yourself an honest assessment, maybe someone else does it with you who can be more honest with you, that is step one, just to stopping the pain or identifying where the pain's coming from, and then taking the action steps to know, okay, here's what I got to cut out. Can I do this? Or the other solution is, can I increase my income? How do I do that? And that's more fun to talk about, but we'll focus on debt.
It is more fun to talk about, but you never really solve the problem. I just did this with my wife a couple of months ago because I noticed that we were in this like hamster wheel of credit card balances where I was always every month I was making large payments on my credit card, never really thinking like, why am I charging thousands and thousands of dollars every month on my credit card? I'm not really even paying attention to what's going on. When we analyzed the statements, it was all
Yeah.
food and beverage. It was crazy.
Yeah.
And I'm not talking about going out to fancy dinners. We have two kids, and you know what kind of lifestyle we live. It was like I couldn't believe how much money we were spending just on groceries and convenience store stuff. And I mean, it was unbelievable. Just to look. So that shock kind of helped both of us say, like, do we really want to be like spending this much money on, at least if we were going out to like fancy restaurants,
Yeah.
it would be like, well, this is a luxury that really is something that we're blowing all our money at the Acme.
Got it.
It
Well, I
was
mean,
bad.
yeah, if it's a grocery store, I mean, in that case, I might look at
Cut
my
back. Get some
bill and saying,
coupons.
yeah, what am I paying for here? Am I getting the high end stuff, the low end stuff? What can I save on? What do I really need?
Right.
I know a lot of times it's eating out for some people, where I can save if I don't eat out as much, and kind of getting to the point of life insurance and being able to use a policy to pay off the debt. The most important first step is to do what you had mentioned, which is identify everything, see where the excess expenses are, and stop them. Because if I've got $30,000 in debt or whatever the balance is, and I have cash that I can pay it off, but I float through a policy first, and then I'm going to use the life insurance policy to pay off that debt, there's a lot of attraction to that strategy because the cash value is forever compounding for you.
Well,
So
especially if it's high interest debt,
it's a
you
no-brainer.
know, if it's credit card and you're
Yeah,
looking at like 15% plus,
yeah.
20% plus, yeah, it really does feel like a no-brainer.
Co-
Unless, yeah, go
Correct.
ahead.
Yeah, we've had a lot of people do that, and they do very well. But the most important thing here is not just paying off the debt, because if I don't correct my habits, which is spending excess cash that's above my means, whatever my income is, I'm just going to end up in the same situation again. But it's going to be a little bit worse. Because if I use a policy to clear debt, now I've got loan interest on the policy that I should be servicing. I don't always have to, but I should be. And for me, when I've got a loan on the policy, I want to attack that policy loan. But if I don't correct the problem I had of spending too much, well, what's going to happen? The credit card bills or that other debt are going to gradually creep back up. I'm going to look at that. I'm going to be stressed out again. I'm going to say, okay, now I don't have this buffer over here of the excess cash in the policy, or if it was just money I had in my bank account to pay it off, whatever it is, I've depleted that. So now more stress is going to pop up. I'm going to be thinking about it at night. I'm not going to get sleep. I'm going to be less productive, and my quality of life is going to just be not good. So in order to get rid of that, right, that stress, get rid of the stress, the outlet there really involves pain, which is first just taking the time, going through everything, writing it down. And again, if that's just something that you hear and say like, oh, that's just too overwhelming, I can't do it, try and find someone who can do it with you. That's how I would look at it. Someone that you're comfortable with, that you can approach, talk about your finances. You don't feel like they're going to judge you or anything like that, or make sarcastic comments, or how'd you let this happen? Because that, going back to what you mentioned with the emotional side of things, like that can be embarrassing for a lot of people, and they want to bring it up.
Yeah.
So they're trying to figure it
Well,
out
a
on
lot
their
of
own.
times, you know, and I can relate to this very much with my situation in a marriage or any kind of partnership. There's usually one person who is very in tune with the finances, and one person, you know, maybe not who is like, you know, completely clueless, but is less involved and everything. And in that person's mind, it's like, you know, he's handling it or she's handling it. You know, I know everything's under control. So for the person in my situation, this is me, who is supposed to be handling everything, when you do identify problems, sometimes it's hard to talk to your partner because, you know, you're supposed to be handling all this stuff. Why is there a problem? When really talking about it is the way forward for sure.
Oh, yeah. Communication is critical.
Right.
And often the
To get
problem,
everybody on the same page.
yeah. And the problem, whenever there's problems, it's always a lack of communication. Like that's what it is. Maybe something else started it, but a lack of communication often causes a problem or makes it much worse. But for the person that's always managing the finances and handling the debt, one spouse says, yeah, they got it all the time. I don't have to think about it. They handle it. And they could be very good at that. But then if you're also working a job or you're running a business and you've got other things to take care of, family responsibilities and everything else in life that just takes up every second of your day, and then you're exhausted at the end of each day, it's like, I'm not dealing with this now. I can do it later, because it's not a dire situation right now. And I feel like that's often what happens. It's not dire, so we don't address it immediately. Then we never address it, and we think, oh yeah, I thought about that before. That was a year ago. Where'd all the time go? And then you've got this big balance of debt. And you're like, all right, how do I attack this? And again, there are strategies that you can use a policy for. That's often what we talk about with the numbers, looking at the cash value growth compared to the loan interest. But again, it's the habit first, which is just,
Right. So
yeah,
if you're talking about very high interest or credit card debt, I think it's important to preface all this conversation with, you really need to get that under control, because the last thing you want to do is use a policy loan to wipe out debt, and then 6 months from now that debt has crept back.
yeah,
So that's kind of its own animal. Let's talk about more installment loans, auto loans. So,
yeah,
you know, I'll make up a scenario that really isn't made up. You know, I've got a $30,000 auto loan for my wife's car, and let's say the interest rate on the loan is I don't know, 6.5%.
Okay.
And I've got $80,000 in whole life cash value that has built up and accumulated. Just on those basic details, it seems like it would make sense to pay off that auto loan with my policy values and set up some kind of payment going back to the policy to pay off the loan in some way.
Yeah, definitely. So, I mean, looking at the numbers there alone, your policy loan interest rate is going to be around 5% right now. And that is going to be annual simple interest. What you can do, there's a lot of things you can do. So you've got $30,000 on the car note at 6.5%. If you said, I don't want to have to deal with this car note anymore, I want it paid off. This way, I don't see these payments coming out of my bank account every month, going to the institution. Maybe I can use this for other things. So you can take a loan from your policy, wipe it out. You get the title of that vehicle now. It's yours. You own it free and clear. Like, okay, one less thing to be stressed out about. Now, with the policy, what I would look at in that particular case, if you had $80,000 in cash value, you borrowed $30,000. First, I would ask, are you comfortable just taking what you were paying on the car loan and just paying the loan back like that? Is that something you want to do? Or would you like to see other strategies? If you said, hey, I just want to pay it back the same way, then just set up auto payment. You can do this with an insurance policy where every month you've got the exact same dollar amount applied toward the loan and you're paying it down in the same time, a little bit shorter because you have a lower loan interest rate. Does that part make sense?
Yeah, but when you're making those payments, I'm can I make monthly payments that are principal and interest, or I'm just making monthly principal payments, and then at the end of the policy year, I'm making an interest payment that encapsulates the original loan and where it's shrunk down to?
Correct. So when you make payments over the course of the year, it's primarily knocking down your principal. The insurance company will only bill you for the loan interest on your policy anniversary date. Now, if you've been chipping away at that balance, you are going to lessen the amount of that interest bill on your anniversary date. So you will be billed separately for the loan interest. So if you said, all right, I was paying $500 a month on my car, now I'm paying $500 a month on my policy, I got an interest for $1,200 on my loan statement. Do I have to pay that? The answer is no. You can, if you can from a cash flow standpoint, but if you're making regular payments, you could just let that loan interest roll over. You're going to chip away at it at about the same pace anyway.
It's effectively similar to just making P&I payments throughout the year.
Correct. We've run so many models with that. It doesn't make much of a difference. But this is if you said, I want to attack it in the exact same way I've been attacking my car loan. If we look at another scenario, let's say you're in a situation where you could use the extra $500 a month in cash flow. Maybe it'll solve some other problems and such. What I would do then is say, okay, you've got your $80,000 in cash value. Let's take a loan of 30, wipe out the car. Here's what your policy looks like if you don't pay anything toward the loan. If you don't pay any loan principal, if you don't make any loan principal payments or loan interest payments and just let it ride. Here's what it looks like if you pay interest only. And then here's what it looks like if you pay interest only for the next 5 years and then begin to attack the principal. Because you can do that, or you can pay it interest only as long as you want and then begin to attack the principal. My point is, going back to the cash flow situation, if someone says, if I'm going to pay this off, the cash flow right now is more valuable to me than repaying this loan. I just want to be able to service the loan so I don't put myself in a more stressful situation. What I would look at there is at least pay the loan interest if possible. You don't have to. Here's what it looks like. It's still fine if you don't. But then when you do attack it, you're going to have a larger loan balance. So it makes sense to pay it if you can. But now you've freed up more cash flow that you can use for other things and then service that loan later because you've got full control of that. You're not getting an institution saying you have to pay this now. And that right there is often what alleviates some of that stress.
Yeah, without a doubt. Yeah.
Yeah.
Well, if it feels like you've taken matters, I think for me in that scenario, I would feel like I took matters into my own hands. I'm driving this ship. This is my, this is
Yeah.
my thing, as opposed to, dealing with an external party.
Yeah, I mean, I like that personally. So if I've got a car note and I've got the means to pay it off from my policy, and we're assuming it makes sense from a loan interest rate standpoint, I would do that for the peace of mind alone. Mind alone. So I
Let's
don't have.
say in that scenario, you've got, you're in a vacuum and you've got a $30,000 car note and you've got $50,000 in a savings account and you've got $50,000 in a policy and your income is, you know, is fine.
Yeah,
You're living
yeah,
way below your means or way above your means or whatever
I got you.
yeah. What do you think you do in that situation?
I would use the policy because I like to have that buffer in cash in the bank. There's always an amount I like to have there, whatever my buffer is. Try to make sure it doesn't go lower than that. I use the policy because I know the money will continue to compound for me. So if it's worth 50,000 today, if it's worth 100,000 in 10 years, I know I can borrow against that 50 now, pay it back, let's say by year 10, and it's still appreciated till the full 100. So I get that constant compounding. Whereas if I use the money in the bank, I don't do that. I'm paying interest anyway on the car note. So I'm going to use the policy. You could get very, very technical with that and say, yeah, well, I mean, if you use cash, you don't have to have any cost to borrow. That's true, but we've looked at the numbers enough times where I would use the policy in that specific situation you had mentioned.
Yep. All right, cool.
Yeah.
Listen, if anybody has any questions or wants to have a debt service conversation or just talk about debt and some effective ways to use your whole life cash value to service debt, feel free to reach out to myself or Steve at any time and we can continue this conversation. Steve, thanks for your time today. If anything else comes up, give us a call. We're always here for you. Thanks, Steve.
Thanks so much, Mike. Talk to you soon.
Bye-bye.